Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast team ripping off their masks. Carol Massar and Tim Stenovec bringing together our Bloomberg Television, Radio, and YouTube audiences worldwide. Another wild day, Carol.
Well, kind of ripping off the worries about inflation. What happened? We got CPI yesterday, guys, and we were all worried. We get PPI today, not so much. Our Peter Coy, economics editor at Business Week, saying, you know, the closer it is to inflation is to consumer, Tim, that's when you get worried, because you're worried about wages going up, you're worried about prices going up, and this kind of wage price spiral really happening.
Yeah, it could turn into a vicious cycle, but it doesn't seem, at least that equity investors are concerned about that happening anytime soon. I think the big difference with today, at least when it comes to the equity markets and the way that investors are reacting, is those initial jobless claims falling to a pandemic low, kind of showing a strengthening labor market, despite the not so great numbers that we got last Friday with the jobs report.
Yep, all Tim, of course, as we push forward to some of the big earnings that we're awaiting. We know, of course, Disney is on deck, Caroline, as we get further guidance about, well, how much this has to do not only with some of the wage increases that we talk about, but really the reopening, the streaming plus, the moat that they've built around that, and the theme parks. Can they play to both worlds? Something we cannot wait to get to.
And I feel like Disney, Airbnb, even Coinbase, all of the earnings we're going to get speak to some of those trends that are in the market today. Romaine, you pointed out so well on our call earlier, the fact that Coinbase speaks to the crypto, like volatility, the Elon play that we had today, but also Airbnb, our desire to get out there and rip off those masks.
Yeah, we're going to dive deeper into that on What You Missed a little bit later here. Well, let's get you into the closing bells. We should point out, over the first 3 days of the week, we saw a huge decline. The Russell was down 6%, the NASDAQ down 5%, the S&P down 4%. You see them fighting back, trying to recoup some of those losses on the week. The S&P 500 right now looking like it's going to settle up about 49 points, up 1.2%. The NASDAQ up about 93.7%, and the Dow Jones Industrial Average back above 34,000, up 433 points, up about 1.3%, Carol.
All right, do want to get to Coinbase because it's crossing the Bloomberg terminal as we speak. First quarter net income, we're talking about $771.5 million, had seen $730 million to $800 million. First quarter EPS, we're looking at $3.05 a share. And first quarter revenue, it looks like it's a little light, but just a hair, $1.8 billion. Estimate was $1.81 billion. And we're taking a look quickly at the stock here in the after hours. And let's just take a look at Coinbase because it certainly is a great indicator when it comes to what's going on in crypto. It's down about 1.4% here in the after hours, guys.
Actually moving a little bit lower now,
yeah,
down
2.3.
9%.
Oh, is it? Okay.
Yeah.
And of course, as we get some of these further earnings, which we will bring you when they come, let's just recap of sort of what a big day it was. Total exact opposite of what we saw yesterday when the only thing that was green was one sector. For the radio audiences, actually, there are only two sectors that were in the red. It was a very broad risk-on rally. So we start with the losers. It's energy and autos. We've talked a lot about the chip shortage, some of the concerns about energy with the reopening of that pipeline. And then finally, we just end up here in the positive. You're up 2.7%, 2.4%, 2.3% with banks, communications, transportation. That really is sort of that risk-on theme, Carol, that we've continued to see.
All right, let's check at some of the gainers, folks. I want to talk about Nucor today because that stock announcing a buyback, a $3 billion buyback plan as their stock hits a record, and it ended up the day up about 5%. Take a look at some of the chip names. We saw a bounce back when it came to Lam Research and AMAT also getting higher, and Peloton, our top NASDAQ 100 gainer, up almost 7%, Romaine.
Yeah, and we were looking out for those earnings. Airbnb closed down on the day, down about 3%. Those earnings crossing the wire are right now. 1Q gross bookings coming in well above estimates, $10.3 billion. The street was looking for 7.5, give or take a couple here. So a big beat there. The loss came in at 195. That's wider than what the street was looking for. The street was looking for a loss of $1.10 here. The company giving a forecast here, expecting 2Q revenue to be at a similar level to that of Q2 2019. So I don't know exactly what Q2 2019 was, but that's the guidance that they're giving right now.
Yeah, very interesting. Perhaps seeing some of those year-over-year numbers. And indeed, this was that reopening play that we've continued to see with Airbnb, Romaine, and some of the other companies like Disney, of course, that we continue to wait for as how much is this a reopening play and that permanent shift or not within some of the consumer habits, Caroline?
Yeah, really digging into some of their numbers overall. And it's sort of interesting that they're talking about, you know, trying to hark back to a 2019 number when that that should be pretty good, strong numbers. If you think second quarter 2019, just as we were pre-COVID, this was when everyone was wanting to go out, getting out traveling. Down, though, 4.6% after hours. What does this spell for Disney, of course, as we all start to see the desire to get back into, well, going out, enjoying ourselves, getting into some of the parks.
Look, you make a really good point. Disney would love to see 2019 numbers at those theme parks. And that, according to some analysts, could be years away. While we wait those Disney earnings, though, let's get to some of the decliners that we saw on the day today. We heard Taylor talk about the pressure facing energy today. We saw that play out with Occidental Petroleum, among other energy stocks. Occidental finishing the day down more than 5%. Bumble taking a tumble down more than 14% today, hitting an all-time low. It beat on revenue, but outlook was disappointing for for this current quarter. Poshmark down more than 22%. Guidance for the second quarter revenue missed midpoint estimates. And then Tesla sliding just around 3% today. That after those Musk Bitcoin tweets, guys.
Should he stop tweeting?
Must Bitcoin?
That's the eternal question, Romaine.
The SEC says yes.
Depends whether you're into Doge or into Bitcoin. If you're into Bitcoin, you don't want him tweeting today, guys. Interestingly, what's also down? Commodities hit hard, whether it's China, of course, trying to ramp in some of the upward trend that we've seen across some of the metals in particular, or also whether we're just seeing a cooling overall of the run-up that we've seen in commodities. Steel down 4% for our radio audience. Brent crude off by 3.5% as well. Oil really speaking to that. Is that a catch-up to some of the negativity we saw in stocks over the last couple of days? Is that about China and talking about the pullback in commodities? Is that more a story of where inflation goes? But Brent crude off by 3.4% at $66.95 is where we trade. WTI crude, a similar move. Meanwhile, maybe a bit of a bid to safety in European hours. Saw the Swiss franc up by 0.4%, Japanese yen up by 0.2%. But overall, the Canadian dollar coming down from that lofty levels versus the US dollar as oil seemed to fall. Taylor.
And of course, what else was falling is bond yields. That's yield lower, it is priced higher. We had a relatively soft 30-year auction, of course, and we are getting some Disney earnings. I'm going to pass that on over to you, Caroline.
Fiscal second quarter earnings per share, 79 cents. Adjusted earnings per share, a massive beat above the 32 cents that wasn't expected. Second quarter revenue, 15.6 billion. Basically in line, ever so slightly shy of their revenue. But their subscribers, guys, falling below expectations. This is where we might have thought a bit of a pullback as people want to get back out into their parks, into experiences. We're not addicted to the TV so much. Netflix posted this. Second quarter Disney Plus subscribers, 103.6 million users. The estimate, Romaine, was for 110 million.
Yeah, and it was interesting, too, because a lot of people expected that those subscriber numbers to hold up, of course, as the parks business got back up and running. I believe Bob Chapek himself is going to be on the Bloomberg Network at some point later this afternoon, so maybe we can pose that question to him. But, with the parks reopening and people buying their tickets, I heard Taylor has already bought a ticket to Disney World here. You would think that would act as a little bit of a tailwind here as far as the forecast goes. I wonder why we're not seeing that just yet.
Listen, I think the Disney Plus number is a big one. And you're right, Caroline. Netflix, they had already come out and talked about, slower growth when it comes to subscribers. But what's interesting is Disney has really changed its focus. It's really leaning in big time into streaming. And you had WandaVision. It's been watched several times at my home. You've had The Falcon and the Winter Soldier. So they have been releasing some big time Marvel content pieces. And so you would have thought that might have provided some momentum. So that's going to definitely, Tim, be seen as a disappointment on the street.
Yeah, Carol, Disney shares down about 4% in extended trading right now. I mean, the number to watch out for was certainly that subscriber figure. At the same time, Disney over the last year just really blew it out of the park when it came to Disney Plus subscribers, exceeding the wildest expectations even over the next few years. We have to keep in mind, though, when it comes to parks and the parks reopening, there are still those capacity restrictions. So even though we saw that data about it being sold out at certain points over the next few months, 35% capacity, that'll happen relatively quickly.
I mean, Bob Chapek, of course, talking about the recovery and the reopening, of course, playing to one big side of the business, that is theme parks. He talks about increased production at the studios, Caroline, the continued success of the streaming services. And remember, they talk about this multi-year sports rights deals for ESPN and ESPN+. I don't want to comment too much and opine, but Caroline, Richard Greenfield over at Lightshed Partners said that his number one question to the company is why are ESPN and ABC still a part of Disney? So very interesting that Bob Chapek, of course, saying they have a good plan for ESPN and ESPN+, as you talk about, well, of course, also within the Disney Plus platform that has been so successful.
It's interesting that we're dropping so hard after hours as well, because what has been priced in, Carol, to this stock? Because this is a stock that is significantly underperformed in 2021, only up about a percentage point. Well, the S&P 500 is up about double digits. So they've lagged in the 2021 share price, but only one, I think they've got like one sell on the street overall. Most people are committed to this stock and are seeing 26 buys, 6 holds, just one sell. We're off by 3.8% on the back of these numbers. Disappointing on the streaming side.
Right. Can't wait to see what the analyst community says tomorrow, with them being the most bullish in a year. Just a recap, Disney, second quarter adjusted EPS, 79 cents a share, big beat versus the estimate of 32 cents. Second quarter revenue, 15.61 billion versus an estimate of 15.85 billion. But again, that Disney plus subscriber number, Romaine, that was disappointing.
And we should just point out, once again, Bob Chapek going to be on the network in the 5 p.m. hour here in New York time. I want to just be real clear, though, on that Disney Parks business, because a lot of people are looking at that. Just to put this into perspective, you're talking about revenue in the quarter of about $3.1 billion. That's down about 44% year over year. But keep in mind, pre-pandemic, this was basically a $5 to $6 billion a quarter business here. So a huge drop off here. If they're able to sort of get that back up and running, Tim and Carol, then you do have a situation where Disney is back to what investors expect it to be. This is a pandemic-driven decline here in revenue. We're coming out of that pandemic. We got the word today, mask off, everyone out.
Yeah, we got our masks off here in the studio. I do wonder, though, guys, just how long it's going to take for the parks and revenue to get back to where it was to pre-pandemic levels. As Cowan has pointed out, it could take up to a few years to get to that point. But this, after recessions, that's typically what happens. But this is a different type of recession because there is still that pent-up demand. And we saw what consumers have done when it comes to saving money. So they have that money there that they're willing to spend. So only the future will tell us.
Yeah, DoorDash coming out. First quarter revenue, it's a beat, 1.08 billion versus an estimate of 995.7 million. So some more earnings. But I got to say, mask off, Disney ears on as the parks reopen. So we'll see what analysts have to say tomorrow. That's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you back tomorrow at the same time, same place, everyone.